All right, guys, man, look at this downward pressure the market just got here, man. Wow. We are here for the FOMC meeting today. It is the big meeting that everybody has been waiting for here. We got the FOMC Federal Reserve rate decision going live in about an hour or so here. It is about 1 o'clock Eastern Standard Time. The rate decision drops live at 2. Something just tanked the market. I'm trying to figure out what it is here. Man, what brutal red action here. OpenAI says that DeepSeek may have improperly harvested its data, according to New York Times. Anybody know else why the market is dropping? Man, this is kind of brutal red action here. Look at this. Look at this candle right here, man. Crazy. Again, the Federal Reserve rate decision is in about an hour. So, yeah, we just left Top Step TV. Yeah, man. Red is coming into the market, bro. I don't know what this is. As always, guys, before we get started here, I'm not an investment professional. I have absolutely no idea what I'm talking about. If you copy me, you might lose. Understand CFTC 4.41 hypothetical or simulated performance have limitations, guys. Basically, don't copy me because I have no freaking idea what I'm talking about. And if you do, you're liable for it, not me. Man, Chad. What is this candle from, dude? We don't even have any economic data coming out. The next Fed meeting is, we don't have the Fed meeting for another hour. We don't really have any other economic data coming out. Anybody know? Oil futures are dropping on the inventory build, but market's panicking a little bit. Look at this red dip here, guys. Wow. 375s. Anybody else know what this news is for? I'm checking my sources. This is the news that I see that recently came out. The current president officials discussed tightening curbs on NVIDIA on their China sales, according to Bloomberg. This is what's dropping the market. So the president currently is discussing tightening curbs on NVIDIA microchips in terms of Chinese sales, according to Bloomberg. Any curbs would likely be a long way off as new team sets goals and officials held early talks about restricting NVIDIA's H2O chip. That is the news that just came out. I'll put this up in chat. Yeah. All right, so this is the news that's dropping the market right now. This is the news right here. So if you look at the news I just posted in chat, that is absolutely what is tanking the market. Honestly, it's a day today. It's a freaking day. We got so much stuff going on right now. We got so much stuff going on right now. Market just turned bearish quickly here. We had some pretty good trades on Top Step TV. Yeah, I'll take it. Pretty good trades. Nice little green day. Can y'all hear the music? Is it lagging? Yeah, the music's lagging. Weird. What's up, Toby? Northwestern Canopy, Connor, Dexter, Wael, Nathan, Smell, Nikolai, Sai, Northwestern, Angry Bear, Forza, Connor, Yellow, Motor, Pawn, what's up, dude? River, what's up, guys? This music right here, you can hear it. Look at this red action in markets, guys. And again, this is a big economic day today. We got all kind of stuff going on, dude. We got the federal rate decision in 55 minutes. I'll put a timer up on screen so you can watch it with me. Yeah, we got 53 and a half minutes or so. 50, we'll call it, 53. Give or take. Yeah. All right, so here is the timer for the rate decision today, guys. I'm going to put up some charts here as well. NASDAQ dumping down here. Look at this red, brutal red action coming up in markets. We got to watch like Tesla, Microsoft, Nvidia, of course, today. I wonder if Nvidia is what's dragging the market down here. Yeah, Nvidia had this big reaction to that news about restricting Nvidia's sales overseas. You can see the E-mini has also responded to it again. We got Microsoft Meta earnings after the closing bell today. Yes, the news that I posted earlier. Again, the current administration is discussing tightening curbs on Nvidia China sales, according to Bloomberg. Any curbs would likely be a long way off as the new team sets goals and officials held talks about restrictions. So restrictions overseas for Nvidia chips potentially coming longer term into the future. Basically what they're saying is that this is probably not going to be anytime soon. It's going to be a little ways out. But I think when you add that to the other news about DeepSeek and all that stuff going on, I think that can be bad here. Yeah, Tesla, I'm sure, dropping a bunch. I mean, restrictions are restrictions. You know, that's kind of what's tanking the market. Nvidia is influencing everything else. Like, a lot of the market follows Nvidia. Is the music paused again? Or is it ending? Okay. I was about to say, man. We got the Fed Reserve rate decision at 2 p.m. We got the accompanying press conference at 2:30. After that, we got Meta, Microsoft, and big boy Tesla earnings coming out after the opening bell. Markets honestly bounced back a lot from this report. When are they gonna have you on Bloomberg TV, bro? Whenever Bloomberg asks me to come on, dude, I can hop on Bloomberg. Well, let's do a poll. I don't think I've done a poll yet. We got our timer up here. Will Powell have a hawkish or dovish tone? All right, so here's the poll live. Vote on the poll. Let me know how you feel. All right, guys. Yeah, we're still watching here. We're still watching. Still waiting. All right, look at this rebound. We basically filled this whole gap from the news catalyst that came out, which basically had to do with restrictions overseas and NVIDIA chips. Quantitative easing incoming, gents. Do you really think they're going to do QE right now? You know, I know the Bank of Canada announced earlier today that they were ending their quantitative tightening phase, right? But that's not the same thing as quantitative easing. Quantitative easing is injecting liquidity into markets through creating online bank reserves. It's a form of money printing and then using those bank reserves to buy bonds and other financial assets, which injects liquidity into those markets. Ultimately is a more dovish action by the Federal Reserve and lowers interest rates, allows banks to lower interest rates. There's a lot of nuance behind it, but one of the deep consequences of this can be inflation. And so it's one of the reasons we had so much inflation following 2020. is because the Federal Reserve stepped in and did quantitative easing for a period of time in a phase. At this point in time, the Fed's actually still doing tightening. If I can remember correctly, according to the FOMC minutes report 3 weeks ago, I'm pretty sure the Fed's still tightening. And so I don't know if we're going to do QE. I don't know if the economic data shows we need to do QE. We don't have a bunch of economic weakness. At least not drastic enough economic weakness that would justify doing QE. It just doesn't make sense to me personally. What do you guys think? Should we do QE? I don't think we should. I don't think we will. I think we might end QT, but that's a different thing altogether, if that makes sense. The benefits of QE, just to put this into perspective, are lower interest rates, right? So if you're mad about mortgages are a little bit of a different animal, but if you're mad about high interest rates everywhere, QE will help that. But it might make prices go up 20, 30, 40%. And so you got to figure out which one you prefer there. Personally, I'm okay with high interest rates. I'm not really getting a bunch of loans or leverage right now. And so I'm okay with higher interest rates and keeping inflation stable, because I think we've got so much inflation over a 5-year period. That's what everybody should fear, is inflation. Like, imagine how much prices have gone up everywhere in the last 5 years, 2, 3, 4x versus what they were in 2019. Now, when you take that context into it, do you really think it's a good idea to lower interest rates? Of course, like lenders, real estate agents, mortgage brokers, people like that, they want low interest rates. And I get it. If I were them, I would want it to be honest. If I was trying to buy my first home, I might want lower interest rates through getting a cheaper mortgage and all that stuff. But the consequence can be inflation. And so, I'm against it personally. And again, I think the Federal Reserve pausing rates kind of signals that they're not going to be super dovish in terms of doing quantitative easing. They're just not, in my opinion, right? But hey, what do I know? Top 3 worst economists in the world right now. And we'll see what happens. Got almost 1,000 people here already, guys. Y'all hit the subscribe button, hit the notification bell. So far, 57% are hawkish, 43% think that Powell will be dovish today during the meeting. And again, we're going to stream the whole thing live like we always do. Let me put the scroller up here, guys. My bad here. Hold on. Let me put the scroller up. All right. Should I lower this or make this bigger? I don't know. I think I can come across like this. Does that work? I think that works. Yeah, hold on. Okay. There we go. I think that's about right. Look at the market bouncing back, bro. Look at my levels, dude. I'm never going to shut up about my levels. Top 3 greatest levels of all time. Look at this thing, bro. Honestly, if you guys listen to me when I was on Top Step TV, I talked about this breakdown here. And, of course, I couldn't predict this news, but my level actually ended up holding before the news came out. And so, you love to see it. You love to see it. FOMC pump coming. Yeah, Mo, listen, bro, scale down your size, dude. If you're losing that many, you got to scale down your size. Or trade a demo account, build a good system, and good luck, brother. I hope you do well, man. Again, if I were you, brother, I would scale down size. I would scale down size, maybe take a break, trade paper, build a system, and then come back with small size, and then, slowly but surely raise your size up as you find success is what you want to do in that situation, in my opinion. But what do I know? I'm not an investment professional. I have no freaking idea what anybody should do. Oh no, sorry, I'm looking at the wrong chat. Hey, hold on. Bro, you're number 1 pound for pound in all aspects. Hey, we try over here, brother. We try. Hey, what's up, Native? Hey, hope you're doing well, bro. Bro, there's levels to it. The crazy part is that commercial real estate is hurting because of the push to go online. And the pandemic was part of that plan. We'll all be ready. I don't know. I think virtual reality and video game design is definitely getting real. simulation theory starts to make a lot of sense in that regard. And I'm not saying I agree with it, but it does mess with your head, because at this point in time, we have incredibly realistic graphics for virtual reality. And the thesis of simulation theory is that if it's one day possible into the future, regardless of how long into the future, if it's one day possible for us to create a virtual reality environment that is indistinguishable from what we currently see out of our eyes right now, it's far, far more statistically probable that we're already in that simulation. And again, people preach a lot about the law of attraction and like The Secret and like all that stuff. And I'm not saying I agree with any of that stuff, to be completely real, but I do think in that context, it could make sense, right? In that context, it could make sense if we were in a simulation and they were something like looping data together and stuff. I think that could make sense, but I think it's fun to theorize on. Who freaking knows, man? We just got to enjoy life, enjoy time with your family, and hopefully we get some runs today in the market. I'm hoping for a run, but I'm not saying we are going to run. Are you liking Nike here? I mean, I'm not going to say yes or no whether you should buy or sell Nike right now. Yeah, good luck. And I think the implications of AI make it incredibly weird right now for everything. Maybe Powell sees economic weakness in real and commercial real estate. Yeah, that's true. I mean, eventually real estate has to correct some. But at the same time, like, in some places, it's all isolation. It's all relative to the place, right? In some places, prices are going to go up regardless of anything. The key with real estate is buying them in the right places. Like, places typically where you get these big discounts in price are not going to be the same places that are going to have genuinely strong real estate markets, residentially at least. And so it really is, it depends on a lot of stuff there. Hey, nice, Wilfredo. What's going to come out before GTA 6? Bro, I'm ready. Dude, I remember when GTA 5 came out. Dude, and it was so long ago. My son was a baby when GTA 5 came out. He was a baby. Like a little baby. I remember he had just been born, or maybe it was like right after he's been born. So that's how long. And again, GTA is a huge game, but man, it takes too long, bro. It takes too long. Or no, my wife was pregnant. He wasn't even born yet. My son wasn't even born yet. What is the logic behind the new potential restrictions on chips? I'm really not sure. They didn't give that context to it, to be honest. They just didn't. All right, guys. Hey, we got 40 minutes left. 40 minutes. We got 1,200 people here already. Thanks so much for the love, guys. All right, Chad. Yeah, DeepSeek's interesting. I hear a lot of different stuff going around, and everybody knows about DeepSeek. I went to jiu-jitsu, and people were talking about DeepSeek and the news that affected NVIDIA, made NVIDIA drop 15%. So that news catalyst has taken over everything. And again, it's super interesting right now because we just have so much stuff coming out the next 3 days. We got GDP tomorrow, PCE Friday. We got Microsoft, IBM, Tesla, Meta earnings today. Tomorrow we have Apple earnings. Friday we have oil earnings. And so we just have like such an array of economic and financial catalysts. It's a crazy time, to be honest. It's exciting for me, but it's also a lot of work. Like, I'm literally, the only break I'm going to get today and everything is the last, like, before I went on Top Step TV, I had about an hour and a half of a break before I, back at my computer right now, I had to charge 3 different pairs of headphones just to make it through the day today. And then I also have a video on how I document support and resistance and the strategies I base around all of that stuff too. And so we just got a lot of stuff on our hands, man. People look at me and they're like, oh, well, you don't, people look at me and they're like, oh, you don't work. It's like, nah, dude, this is freaking work. But it's a beautiful thing. Like, it's something I'm truly passionate and interested in. So it ends up working out. Like, I'm okay with the work. It's better than sitting at a desk somewhere, Yeah, and what, we talked about earlier in the day is that the DeepSeek news is going to mean some big implications for the future of AI, including NVIDIA. It's going to make AI more efficient for everybody, less expensive, more accessible, and it's going to ultimately allow the rate at which AI grows to be more exponential, if that makes sense, right? It's going to allow it to grow faster because it's going to be more efficient. It's going to be cheaper, more accessible to others versus just the big, richest people and businesses. And so, yeah, I think ultimately it'll be a net positive for everything. And so I don't think it's the terrible news people make it out to be. I think it's fine, and I think they made it open source. We can see how they did it. I think that's ultimately good for the world. But we'll see. Yeah, Alibaba announcing today on the Chinese New Year that they came out with their own AI system that they say is better than DeepSeek. The only thing I expect now is for NVIDIA to come out with their own AI system that they say is better than both of them. That would be hilarious, I think. Just kind of one-upping each other. Yeah. Yeah, as a programmer, and again, I'm more of like a JavaScript, React Native guy in terms of programming. I know a little bit of Python, but I'm mostly front-end program stuff. In that perspective, it's crazy. AI is going to be powerful because, right now it kind of spits out spaghetti code, but in 2, 3, 4, 5 years, AI is going to be able to program like the best programmers across the country right now. Like AI, and again, you might say, hey, well, aren't programmers going to lose jobs? Sure. But there's going to be jobs created from AI that are going to, I don't know if it's going to completely compensate for the jobs lost, but it's going to be somewhere in the middle. And so it's not a complete net loss there, if that makes sense. Why was there such a big drop? The big drop had to do with the current administration saying that they were going to maybe put some restrictions on NVIDIA chips overseas. They came out with that just now. That's probably what the big drop is from. Also, OpenAI says that DeepSeek may have improperly harvested its data, according to the New York Times as well. All right, chat. We still got 25 or 35 minutes. What's up, Dante? Yeah, DeepSeek probably uses, yeah. Yeah. I have a bad feeling about markets. I think we're going to correct sometime this year or next year. I really do. I genuinely think that. I think markets are up way too much. I talked about a correction. People like to give me a lot of heat and call me a permabull, but 2 months ago I sold most of my positions, if you guys remember. And the reason I sold them is because it was maybe like a month and a half ago, around Christmas. The reason I sold them, and I told everybody the same logic, which was that and again, I'm not telling you what to do. I have no freaking idea what's going to happen here. But the NASDAQ is up over 100% in 2 years. That's a crazy amount. That's a crazy amount. If we look at the averages historically, 10% average a year usually for the NASDAQ, for the S&P about 10%, 8% on average. And so multiple 20, 30, 40% plus years in a row is kind of an out there thing that generally markets can correct from. I'm not going to say they will, but generally markets can correct from. Now, it doesn't mean we're going to be down or we're going to have all these bearish years or anything like that. I just think the market needs a correction. And once a year, the market tends to correct at least 10% already. And so when you factor in the deep extension that we see, I think it's possible for sure that we correct sometime this year or next. Regardless of any of that, though, the long-term trend is going to be on the upside in the market when we zoom out in terms of like decades anyway. So it doesn't matter too much, but I'm going to look to buy some discounts if we get it. And if I'm wrong and I miss out on some profits, it's all good. I would rather be safe than sorry in this situation. Yeah, that's kind of my look here. Hector's going to be running 3 Honda Civics with spoon engines and a Motec system exhaust. Yeah. Honestly, I used to have an Eclipse, you know. I had a Prelude too. I had some cool cars, bro. And I was a tuner guy. Like, I was a tuner person, you know. No, I trade futures. We trade a little bit of everything. Free t-shirt? No, man. It was a GTX. Like a 97 GTX or something like that. Yeah, a friend of mine had a GSR and a Type R. Old school Honda. Or no, old school Acura 90s Type R. Yeah, we're getting some volatility. I'm watching this 480 level, to be honest, here. And we're already up a bunch, to be honest, on the day. So we'll see if it continues. I'm going to wait until the FOMC meeting's done before I trade, personally, just because the amount of crazy volatility we might get here can be big. I'd be careful today. If you watch me on Top Step TV when I traded mostly sideways range, attacking the broader range on a 1 or 5 minute chart is what I did. How can I learn trading? I mean, just paper trade. Figure it out that way. That's what I do. John on the next Fast and the Furious. What it would be, Fast and Furious 37? How many of them they got now? It's something like that, right? Look at this. All right, well, we're at 480 here. I kind of want to take a little piece. I don't know yet. I'm going to wait. I don't like that. Let me wait. Gold sell. Yeah, we still got over 30 minutes before the decision. And again, it's going to be a pause, right? Let's break down some economics for you guys today. So basically, the Federal Reserve is like the big bank that creates policies and influence other what's called regional banks, right? And these regional banks got a bunch of different heads. The heads of these regional banks, along with Big Papa Jerome Powell, make up the FOMC committee. Now, they vote and do different things and influence monetary policy in a number of different ways. The first major one is they influence the federal funds rate. They raise it or cut it by doing rate hikes, is raising the federal funds rate. Cuts are cutting, lowering the federal funds rate. And they do this depending on where the current economic landscape brings them. If the economy is weak and we want to save us, and they want to save us from a weak economy, in theory, they will bring interest rates down, lower interest rates, give everybody a lot more cheap, accessible, low interest rate money. And the consequence is that they tend to spend more because they have cheaper access to money, and this stimulates the economy in a number of different ways, and businesses thrive a little bit more when interest rates are lower, and they can hire more, and there's a lot of trickle effects of a low interest rate environment. And the Fed will do this. Like in 2020, they cut rates to almost zero because we had like a looming economic disaster happening if they didn't. And the opposite of that is a rate hike. They will raise interest rates for the same reason. If inflation gets out of control because of too strong of an economy, the Federal Reserve will rate hike. They will raise interest rates because when people have less cheap access to money and leverage and loans and low interest, and instead interest rates are high, people tend to spend less because they got less money to spend. This has a trickle effect, just like I said, and it tends to cause people to spend less, and the consequence of spending less is inflation goes down in theory. The Federal Reserve will also do some other things, like they will do quantitative easing, which we talked about earlier, which is a form of money printing in which banks create money printing and they create bank reserves, and then they online, and they use it to buy up financial assets like bonds and other stuff. This injects liquidity. It's kind of a more drastic kind of desperate measure by the Federal Reserve to stimulate the economy versus just straight up lowering interest rates. And again, this is called quantitative easing. The consequence of this drastic, more desperate measure is inflation. And again, example of this is we did quantitative easing in 2020. We lowered interest rates to almost zero. And the consequence was that the labor market rebounded quick. And the effects of it lasted longer than expected because inflation spiked up to 10%. And inflation doesn't really go back down. Once it goes up, we're kind of stuck with it. The best we can do is slow it down. And so then the Federal Reserve had to play the other side in which they raised interest rates to push it down a little bit, if that makes sense. And inflation eventually slowed back to where they're kind of at now, where anywhere between 2 and 3% in some ways, depending on which one you look at. On Friday, we have something called the Personal Consumption Expenditure Index. Core PCE is the most important one. This is what the Fed uses to gauge inflation. And so right now in this current market, traders and investors and economists don't know what to fear. They don't know if we should fear economic weakness or if we should fear spiking inflation. And so the Federal Reserve today is almost certainly going to pause interest rates, meaning they're going to leave them unchanged. When we say basis points, we're meaning quarters of a percent. And so currently we're at 4.25 to 4.5%, which is 425 to 450. And the likelihood is that we're going to keep it the same. We're not going to influence this at all. It's currently 99.5 to 0.5% likelihood of a cut. Here's a cut expectation way down here. And this is a pause, which is almost certainly what we're going to do. It's kind of a neutral decision by the Fed. And so that's where we're currently at now. But because this is so overwhelmingly expected here, everybody and their grandmother thinks that we're going to pause interest rates. And that's almost certainly what we're going to do. Because of that, the big market mover today from this FOMC meeting is not necessarily the decision. It might still cause some volatility and all that good stuff. But the big market mover today is instead what Jerome Powell says, what his tone is like, what the initial decisions report shows. If he's hawkish, meaning restrictive in terms of monetary policy, hawkish buzzwords can be something like inflation is elevated, inflation is up. The labor market is showing resiliency and strength. Inflation is high. Some buzzwords for the other end, which is a dovish mindset, a less restrictive, is economic weakness buzzwords like potential recessions, looking into the future, stuff like that, right? And so those are things you want to pay attention to today. And again, we're going to stream the entire thing live as we always do here at Beginner Trading. And so let me know what you got. And most importantly, what color is Powell's tie? I'm going to go with purple. Don't ask me how I know, but I think Powell's going to have a purple tie today. It's going to be like a lavenderish purple tie is my guess. And so what do you guys think? Hawk, dove, bear, bull? What do you guys think? Let me know. Yeah, market went all the way back up. How does one deliver a cut being dovish? Well, a cut is dovish. Dovish is low interest rate environment, and lowering interest rates is a low interest rate environment. A pause is kind of a neutral thing. It's kind of flat, but it's definitely more hawkish than we've seen over the last 4 meetings. The last 3 meetings, we've cut rates, 50 in September, 25 in November, 25 in December. And so today in January, if we pause, it's more hawkish versus... it's more hawkish relative to the last 3 meetings, because the last 3 meetings we lowered interest rates. If we pause, it's definitely a more hawkish stance than at least we've seen over the last 4 months. So why do my headphones keep going out? Is this are we lagging? Weird. It keeps pausing. Strange. Pun intended? I don't know. Yeah, no lag. Okay, cool. Yeah, I don't know why the music just stops all of a sudden. Yeah, my guess is he's going to be kind of flat, neutral, data dependent and unwilling to make take a stance on either side is what I think he's going to be today. I think he's going to sit in a pause, neutral, flat tone and stance. All right, good. All right, guys. You guys ready? Yeah, it's pretty probable that Powell is going to pause today. Anybody betting anything outside of that, I'm just going to assume they have no idea what they're talking about, but maybe I'll eat my words. Again, somebody that covers every single FOMC meeting. I always get people that make these big, wild predictions. Most of the time, they're just trying to be shocking so that people tune into them, and so they're kind of like manipulating people and kind of misleading people so that they get more views. But again, anybody that knows their stuff is going to tell you that the super strong odds are on a pause today. That's just what it is. No, I mean this FOMC news will influence price at least a little bit. Now we never know how much it's going to move, but I would say the FOMC meeting is a bigger catalyst than CPI even. And we cover all this stuff. We cover PCE, GDP, CPI, Powell, earnings. The FOMC decision is typically a larger catalyst than all of those. It depends on each one. Some FOMC decisions are kind of boring. Others are super exciting. Like last time we dropped a bunch. All right, guys. All right, guys. We got 22 minutes left. Market's still breaking down under this range here, man. Choppy sideways day, but we are getting a little bit more bearish action after that news that came out. Here's the 200 exponential, and again, I never shut up about it because it's genuinely powerful. Like, look, here's the 200 EMA. If you notice anything, the market wildly respects it. Oh, shout out to Tyler for becoming a member. Thanks, man. Appreciate it. You now have access to these coveted emojis. You're welcome. I know you're going to thank me for that, but hey, thank you, sir. I appreciate it. Yeah, again, just be careful, guys. Very volatile day. Very kind of, can be a risky day to take big positions, in all honesty. So just be smart. Be careful. I would be just very, very careful if you can today. A lot of craziness going on. Honestly, and it's not just the Fed meeting, man. We got 20 minutes until the Fed meeting, but we got we got Microsoft, Meta, Tesla earnings at the closing bell today, which we are going to stream as well. Powell is going to be hawkish. He's hawkish a majority of the time. Well, I think you've probably experienced... okay, to put it in perspective, right? The last 7 meetings, the last 2 years, really, Powell has been much more hawkish because we had to kind of correct from the super dovish post-2021 period of time where inflation was up to 10%. And so, yeah, he's going to be hawkish from most of that. Doesn't mean he's always hawkish. It just depends on what's going on economics-wise. Do we expect good numbers from Apple, Tesla, Microsoft, Meta? I don't know about good. We'll see. A lot of people do. I just think it's a volatile period of time. Yeah, it's 1 minute so we can see the closest reaction to it. It doesn't make sense to put an hourly chart up when big volatility shows up. I mean, not for me at least. It depends. What do I trade there? Depends, to be honest. Depends on a lot of different stuff. All right, guys. Are we going to break 200K this year? I think we will. I kind of want to take some trades too. Powell speaks like 5 times this week. No, he doesn't. I'm almost certain he does it, but I'm going to check it anyway. The Federal Reserve might speak this week, but let's see. Bowman speaks on Friday, not Powell. Today's the Fed meeting. Next week he doesn't speak at all. He speaks once this week. Yeah. I don't really see Powell speaking after this. There's a blackout period as well. John, is trading your full-time job? No. I'm horrible at trading, bro. I'm top 3 worst trader ever, dude. I certainly don't live off of trading. Nine times. Come on, JP, don't let us down. Yeah, we'll see. No, the big story of this week is, okay, just, again, I'm going to lay it out here. We got Powell today Powell's going to speak here in about 50 minutes. 47 minutes to be exact is when Powell speaks, in 47 minutes. In 17 minutes, we get the Federal Reserve decision with the statement from the Fed, right, which is going to influence markets a lot. At 4 p.m. Eastern Standard Time today, we get the release of Microsoft, Meta, Tesla, and IBM earnings right at the closing bell today. And that, again, that's only about an hour after we're going to shut this stream down. Following that, we get the earnings call from all those different companies. Yeah. And then tomorrow we have GDP data in the morning at 8:30, PCE inflation data on Friday, Apple earnings tomorrow after the closing bell, oil earnings on Friday in the morning, I believe, is what I think it's that, but I'm not 100% sure. You can use it on any time frame, and traders tend to watch the 200 exponential because it's such a long-term moving average. I just like it the most on a 1-minute chart because I scalp and trade 1-minute ranges, but everybody's different. Yeah, I'm going to stream all the earnings too. You know, I feel like people are just randomly saying stuff. Like, who in their right mind thinks, oh, 0.5 basis point cut today? Okay, you're actually probably trolling me because I said, what did I say? I said if we cut rates today, I have to go get a haircut at Walmart, is what I said. I made a deal. I had a moment in time about, I don't know how long ago. It was probably like 13 years ago. I was walking in Walmart with Carol, and I decided to go get my hair cut. And the guy that cut my hair literally cut both of my ears to where they were bleeding. And again, little, young 20-year-old John, or however old I was. I don't remember how old it was. It was probably like, I was probably either teens or early 20s. Little old young John didn't even say anything. Bro, my ears bleeding. He knew my ears were bleeding. I knew my ears were bleeding, but he didn't know that I knew my ears were bleeding. Super awkward. I left and went to Sport Clips, I think. Never again. But if we cut rates again today, I guess pun intended, I'll go get my haircut at Walmart. I didn't say I would shave it. No, there ain't no freaking way, bro. Listen, I'm old, dude. I'm in my 30s. All right, I need my hair. All right, we don't know how long. I mean, listen, at 80 years old, I'm gonna have hair. Okay, but just in case, I'm definitely not shaving my hair. Yeah, never again. Never again. Does he really do a Spelman College thing? All right, now you got me checking. Does Powell actually speak? Who's asking me for a free t-shirt, bro? Like, dude, I don't have any custom t-shirts, bro. Like, I can give you a random shirt from my inventory, you know? It might just be a white t-shirt, dude. Do you really want it? I'm not going to ship it. Probably costs more to ship it than the shirt actually costs, bro. I mean, go to Walmart, sir. Don't get a haircut, though. All right, guys. Now you got me. Okay, let me see the Spelman College thing. Hold on. All right, chat. Hey, we got 13 minutes left. 13 minutes. All right. It sounds plausible is the only reason I'm checking. I'm pretty sure. Yeah, I don't see anything about this. The last time Powell spoke was Spelman College, December 1st, 2023, years ago. I think you're just making stuff up. Y'all, again, encyclopedia of chat. Correct me if I'm wrong here. I speculate that Powell will neither cut or raise interest rates. It is because he might suspect tariffs can increase inflation if you'll go through with it. Yeah, I mean, Powell's going to pause. I mean, that's overwhelmingly probable. I pay $175 for my haircut? Man, fancy, bro. Fancy, dude. Like, dude, I make good money. I'm not even trying to brag. I'm just using that context for what I'm about to say. I make good money. I don't think I've ever paid more than $40 for a haircut in my life. You know, coming from somebody with the top 3 best hair in the world right now, you know, if I had some fancy haircut, sure, maybe. But I don't think I've ever paid more than $40. Maybe that's why I wear a hat every day on stream. You know, that's probably true. Yeah, maybe you're right about the Spelman College thing. I don't see it, though. Why 13 minutes? So it said 2:30 Eastern Standard Time should be in an hour because you're talking about the press conference. I'm talking about the actual rate decision. It's going to be in 2 p.m. in 11 minutes. Where do you guys watch the FOMC at 2 p.m. live? The FOMC decision comes out at 2 p.m. Eastern Standard Time every single 6-week period. It's exactly the same. It's at 2 p.m. Eastern Standard Time. That's the Federal Reserve decision, which is going to be a pause, right? We might get some words on it, which is why people are tuning in. That's why we got 3,000 people here. The other thing that happens is the Federal Reserve's interest rate press conference. Hey, what you doing? You home? Yeah. Earlier I was on a different show, you know. You want to say hey to everybody? I mean, you don't have to. It's up to you.
I just didn't want to disturb you.
No, you're good. This is my own show, so I could talk about jiu-jitsu for 5 hours. Nobody can get mad. Oh, my gosh. Baby, how dare you? You made me spill my drink. No, I'm just joking. Here, give me a... No, thank you. Man, I'm messing up today, guys. I got this fancy keyboard.
He just spilled his stuff all over it.
I was telling him about the Walmart haircut story. Carol knows. I have a deal with them that if we do not pause rates today, if we cut rates, I have to go get another haircut at Walmart.
Oh gosh.
Yep.
Why?
This dude was sketchy. She knows.
Yeah, I'm more worried about some type of.
I have pictures.
Yeah, like he had nicks all over his ears and stuff. I don't think that's
dude.
very hygienic though.
Honestly.
Because you were getting nicked on your ear.
Yeah.
And like he was like bleeding on his ear and on his neck.
Yeah, it was a bad thing. It was a bad thing. Smooth forehead, Carol. Honestly, no. I was talking earlier about Tom Brady, bro. There's just something off about Tom Brady. His face is too shiny. Is this in context of the Tom Brady? No, yours is fine.
Shiny?
Yours is kind of shiny, but you're a girl, though. It's supposed to be shiny. You know, from my wives, top 3, I expect shiny foreheads here for sure. Like, if they're not shiny, I'm like, nah, you know.
Top 3 shiniest forehead.
You're definitely one of my top 3 wives ever, you know. All right, baby. Look, I love you. I got to cover the Fed decision in 9 minutes, so thank you for saying hey. Everybody say bye to Carol. She's leaving. Yeah, definitely one of my top 3 wives ever.
Top 3.
John, the skincare expert. Yeah, that's me. All right, guys. All right.
Guys.
Hey, we got 9 minutes here. 9 minutes. Everybody saying bye. Yeah.
Bye, everyone.
All right. Yeah, there's just something off about Tom Brady. I don't know what it is. Are we hawkish or dovish on John Jones fighting Tom Aspinall? I mean, my mind's telling me no, but my body hopes that Tom will fight John Jones because it's really the opposite. I hope that John Jones will fight Tom Aspinall because even though John Jones is the GOAT, he doesn't want that. You could just tell. You know, you could just tell, man. Yeah, we're going to stream the full meeting at 2:30 as well, guys. Just a clarification. Oh, I need Carol to bring me my other pair of headphones, actually, here. Now that we're talking about this. All right. John, do you trade the VIX? No, but I look at the VIX to gauge volatility. And the VIX today is back down to 17s ahead of the FOMC meeting. Hey, baby. Hey, can you bring me the headphones? There's 2 plugged in. One of them should be plugged in next to our bed. Next to my side of the bed. The other one should be plugged in next to the sink in the kitchen.
There's nothing plugged in next to your bed.
Okay, I must have moved it. I don't know what I did with it. But, yeah, just check the sink then.
Okay, well, which one do you want?
Just bring both of them. All right, love you. Thank you. Bye. All right, sorry, guys. Again, we're streaming all day today. I got to have headphones here. All right, guys. We got 3,000 viewers here. We have about 7 minutes left, chat. 7 minutes. I'm focusing here. I got to get headphones today. We got so much economic reports coming out. Thank you. Yeah, I mean, Powell, again, buzzwords I would listen for is inflation talk. Like what he thinks the labor market's doing, what inflation is doing. Inflation means hawkish Fed. If he thinks inflation is more elevated than the Federal Reserve expected, then it's much more probable that the Federal Reserve into the future is going to be more hawkish. I would also listen to the Federal Reserve Q&A where they interview Powell and just listen to future projections about things. Powell doesn't like to give too much information about future projections, but he gives some of it usually. In terms of like listen for what his base case is in terms of cuts this year. That's going to be things that like naturally influence the market a lot. Yeah. Are you going to say to us if the Fed ends QT? Yes. Stop spamming, but yes. I mean, it depends on whether they say it or not. It depends on whether they say it or not. John Jones said he was looking to fight established fighters and not up-and-comers. Yeah, well, the big irony is that John Jones got his belt from an old Shogun Hua who was willing to fight him on short notice. And so if Jones expected like older fighters to let him compete for the belt when he was a young gun, he should do the same for them and risk his legacy to do the same thing that they did for him, right? And it's not about that. It's about if he's going to be the heavyweight champ, you got to fight the freaking top contenders, which obviously is Tom. He just doesn't want to fight him. It risks his legacy too much. I don't think he's scared necessarily. It just risks his legacy too much. Anyways, back to the Fed. Yeah, the Federal Reserve today, we'll see if they end QT. They're almost certainly going to pause interest rates. And we'll see. Surprise rate cutting. Stay away from coffee. It's not coffee. I just have ADHD. So in big moments, I get a little hyperactive. You'll be all right. Hey, what's up, David? They will cut. They're not going to cut, bro. They're not going to cut 25 basis points. If they did, it would shock the markets. I don't know if it would shock it in a good way. A cut might indicate or imply like panic by the Fed, because that's kind of a more shocking thing. Again, every time we have this, somebody says that they're going to do something wildly outside of expectations, and they never do. It's 99.5 to 1% likelihood that they cut rates today. And again, if they do, I'll get a haircut at Walmart. Yeah, it's looking like, I think we're still pretty probable. Like if we look at the odds here, and again, we got 3 minutes left. If we look at the odds here in March, they're still expecting, a majority of people are expecting to pause this meeting and next meeting in March. Still a 32% chance that we're going to cut in March, though, next meeting. But we'll see if that changes. It depends on the economic data comes out. Like tomorrow's GDP is important. It's the initial estimate, so it's the most rangy, less predictable one. It's expected at 2.5%. And then Apple earnings might influence. If the market's weak, that might push them to be a little bit more dovish and loose monetary policy-wise. We have PCE inflation data on Friday. If inflation is elevated, they're going to be more hawkish generally in the future meetings. If inflation is less elevated and better than expected, then they're going to be more willing to lower interest rates earlier than expected, if all that makes sense, right? But those are the kind of like the paths that you want to follow in that regard in terms of like what they do, what they say, what the choice is, and all that good stuff. Quantitative easing coming? I don't think so. I don't think they do QE. They've got to end QT first. They could do QE, and that might be a middle ground. I'm not sure. Yeah. There's no way we're going to cut. Yeah, I don't think we're going to cut either. I think betting that we're going to cut shows that a lack of understanding about economic policy. But maybe I'll eat my words and have to go get a haircut at Walmart as possible, you know. The decision drops in a minute and a half right now. In 1.5 minutes is when the decision comes out. It's going to initially impact the market, and we're going to have to look at the Federal Reserve's statement. But yeah. Time will tell, chat. Time will tell. We're not lagging, are we? I don't think we are. Yeah, so far so good. We got over 4K people here. Man, we got like 4,300 people. Dude, the Federal Reserve website's down, dude. Weird. My computer doesn't even have that many. Let me put one chart up here. Much more intensive. Much less intensive, I mean. All right, there we go. We got the Federal Reserve site up. Weird. All right, guys. Here we go. 40 seconds, guys. 40 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream. We are here. We are ready for the Federal Reserve statement and rate decision here, chat. Ready. All right, guys. Here we go. 20 seconds. 20 seconds. All right, guys. 10 seconds. 12 seconds. Hit the live button next to the play button, chat. Make sure you're fully caught up on stream here. And 2, 1. There's the timer. Okay, I'm pretty sure they paused rates. No big brash reaction from markets. I'm 99% sure they paused rates. Yeah, they paused. Yeah, the Federal Reserve paused. So, not a shock. Are we lagging? We're not lagging, are we? Yeah, no change. They paused. I mean, again, I try to tell you guys this. They kept rates at 425 to 5 as expected. Decision was unanimous. Does not include language that inflation had made progress towards 2% inflation goal as it had in the December statement. And so we'll put this data up on chat. But I told you guys, like, it's not a shock. This is very easy to predict here, guys. And so again, like, I'll read the whole thing to you. This is very easy to predict, like incredibly easy to predict here, in all honesty. Like it's not like a shocking statement. And again, I hope it kind of goes to show that the people making these like wild predictions for these Fed meetings are kind of like, I'm not going to say clueless, but they don't really understand it, right? Like I'm going to read this whole thing. It says recent indicators suggest that economic activity has continued to expand at a solid pace. The unemployment rate has stabilized at low levels in recent months, and labor market conditions remain solid. Inflation remains somewhat elevated. Committee seeks to achieve maximum employment and inflation at the rate of 2% over the long run. Committee judges that the risks to achieving its employment and inflation goals are roughly in balance. The economic outlook is uncertain, and the committee is attentive to the risks to both sides of its dual mandate. In support of these goals, they decided to maintain the target range for the federal funds rate between 4.25% and 4.5%. And considering the extent of timing of additional adjustments to the target range of the federal funds rate, they will carefully assess incoming data. You know, all the rest of that stuff. But again, they paused rates. I told you guys they would. If you bet that they wouldn't, you have no idea what you're talking about. And, you know, I hope you guys understand what this all means. And again, markets have really not reacted too much to it. You know, they said inflation is still somewhat elevated. They said market conditions remain solid labor market wise. Unemployment rates stabilized at a low level in recent months. So everything is pretty good. Not really anything big. The next step here is again going to be the press conference that we're going to stream live in about 30 minutes. We'll put a timer up here for the press conference. But yeah, this is not a shock. Again, I told you guys, not really, you know. You're welcome. I try to tell you guys what's going to happen, but for whatever reason, you know, it's kind of like the Dunning-Kruger effect, right? Like the Dunning-Kruger effect, so many people bet on different things that are really new. Right, and because they're so new, they don't really understand like why it's such an out there prediction that they're making. But they have deep confidence in it, and so they just kind of bet on these wild things that have basically no chance of happening. You know, it's fine if we're 60-40, and like it's a 60 to 40% chance of a rate cut or whatever. That's understandable, right? But this is not that. Like this is just 99.5% to 1. And so again, now what we're gonna look for is what Powell says during the actual meeting. Okay, what Powell says during the actual meeting is going to reign supreme here, and it's probably what you want to pay attention to. So, yeah. Again, don't go anywhere. We got the full press conference, which is probably going to move markets more than this will, chat. So, again, stick around. Don't go anywhere. We got the full FOMC press conference going live at 2:30. Be ready. Yeah, I mean, this is actually a pretty small range here. Like, we're not really moving that much in anything, really, because it came in as expected. And it wasn't a conflicting one where it's like 60-40, 70-30 even. It was 99.5 to 1. Or 99.5 to 0.5, I mean. So, yeah, I mean, everybody already knew. Anybody that understands economics and policy is going to know we're going to pause rates today. Pretty easy to predict. Doesn't take a genius. Yeah, we're going to put a new timer up. I got you. We have 25.5 minutes left. So, yep, we're here. We can take a look at, like, gold. There's gold. We can take a look at the dollar index. There's the Dixie. Up a little bit. But not a shock. Pretty flat market action. Again, guys, don't go anywhere. In 25 minutes or so, we're going to cover the full FOMC press conference live as soon as it happens on stream like we do every single time. If you want to check out a sponsor of mine, check out TopStep. TopStep is one of the most legit funded programs in the world. If you want to learn to day trade, almost all day traders lose. Do not fund your own account with thousands of dollars in the beginning because you're almost certain to lose that. And any day trader will tell you that's the truth. TopStep is a middle ground between a demo account and an actual like funding your own account, self-funding. It costs $50 a month for the base one. They give you a $50K demo. If you can make $3K in profit without losing $2K first, following their rules and conditions, they fund you $50K, 90% split. And this is the S&P, the NASDAQ, the Dow, the Russell, gold. All these things are in futures. I can day trade the QQQ and the SPY price action. The patterns are very, very similar to day trading stock patterns and blue chips at least. No PDT restrictions. And so if you fail, you're out $50. It's not the end of the world. And most day traders are going to fail, right? Most day traders lose. If you pass it, you get a 90% split. Anyway, you get to keep your first 10K in profit. And what it does is it's kind of like a souped up demo account. It builds your skill, teaches you how to follow rules. The ratio is reasonable, and they've paid out almost $200 million in the last 4 years. They fund thousands of traders. They're the most legit one in the world, and just a great way to learn how to day trade. But I am biased because they pay me money. And remember, guys, I have no freaking idea what I'm talking about. So if you copy me, you might lose. I do trade off stream. Sometimes I lose off stream, and you're not going to see it. Understand CFTC 4.41, hypothetical or simulated performance have limitations, guys. I'm not an investment professional. I'm not liable if you lose money. I have no freaking idea what I'm talking about. Don't copy me. But if you want to check it out, here's the link in the description. A great way to help support the channel here. I'll put the link up right here in the chat. You can also find it in the description as well. There it is. Also, guys, if you want to see the Federal Reserve statement yourself, I'll put this link up here. Here is the Federal Reserve's statement altogether. So this link is the Federal Reserve statement here. And so if you want to see it in HTML format, there it is right there. Bro, I'm trying to sell outdoor furniture to buy Bitcoin. Can someone help? I mean, what do you want me to do, bro? I got like 4,000 people watching me. I don't know what you want me to do. You want me to buy your couch? I don't know, bro. Yeah, if you lose the account, you can still use their practice tool. Again, if you were going to pay for a demo account outside of it, it's going to cost like $50. It's going to cost the same ballpark. People still complain about it because they lose and they want somebody to blame, but it's genuinely useful for traders. I wish I had something like that in the beginning because I would have lost much less than I did. But again, I'm biased. I get paid by them, so, you know, I'm biased. I can't say too much, but incredibly useful, in my opinion. Yeah, Feds leave rates unchanged. Yeah, I'll put this up on screen. It's pretty clear. Here, I'll put this data up on screen so you guys can see it. Again, the Federal Reserve have left rates unchanged. The meeting is at, the press conference is at 2:30. Here, I'll put this up on the screen as well. All right. All right, guys. So, are you guys bullish or bearish on the accompanying press conference that's going to happen at 2:30 here? Are you guys bullish or bearish on this? The market's pretty indecisive and neutral here. It hasn't really done too much. What do you guys think? Again, stick around. In 20 minutes, we're going to cover the full press conference here, guys. So just stick around. Let's do this. I don't want you to copy my trades, bro. Don't do it. Bearish, bullish, bearish, bullish, bullish, bearish. Pretty split down the middle. We asked people if Powell have a hawkish, which means a restrictive tone, or dovish, which is a loose tone. 60-40 think hawkish. Again, a pause is innately hawkish when you compare it to the last 4 meetings. So I guess I'm hawkish. I think he's going to be neutral. I think he's going to be data dependent neutral. He's not going to say too much. Can I copy your trades, bro? No, you can't, man. Don't do it. Congrats, Pew Pew. That's a great thing, man. Yeah, I quit smoking years ago, dude. It gets easier. It gets easier. Like, eventually you realize, like, the way you really quit is I quit smoking, and the way I did it was I went from smoking cigarettes to vaping nicotine, and then I went from vaping nicotine to vaping CBD, and then I went from vaping CBD to nothing. And so I stair-stepped it down. That worked really well, to a point now where, like, I've tried to smoke a cigarette in the last, like, 3-4 years. Every time I do, I get, like, genuinely sick, and that's a discouraging factor. Like, if I hit a cigarette and I'm going to get nauseous and puke, it makes me not want to do it, and so it genuinely works well. You just got to get past that point. Not a smoking, quitting professional, though, over here. Yeah, we got Tesla and Meta earnings after the closing bell today, guys. Tesla Meta earnings in about 2.5 hours here after the closing bell. Are you guys ready? Are y'all bullish or bearish on that? That's a big event. Honestly, that's a huge event. Selling outdoor furniture. Is it your own furniture or are you just reselling it? Yeah, for sure, Rob. 100%. Do you think they could also pause the QT? I think they could. The Bank of Canada did that this morning where they ended QT, which is a reduction of their balance sheet. That's a QT is a hawkish measure, and so if they end QT, it's dovish. And that's possible. Some people were yelling QE. I don't know, man. They could. It's possible. It's more possible than a rate cut, but I still think they might end QT, but I don't think they're going to start QE, if that makes sense. Yeah, good for you, bro. I wish you the best, furniture salesman guy, whoever you are, wherever you went. I can't find your name right now, but Tesla Meta earnings. I think it's a big earnings report for both of them. I think they're related to AI. We've had a lot of AI catalysts in the last 3 months, in the last quarter, and it's an important one. But I'm not sure. Yeah, we got a video, midnight. Just check our videos. Yeah, loose. Yeah, what's funny, Pew Pew says, hey guys, lose is different from loose, right? What's hilarious is I got people that try to call me stupid, and they call me a looser, Looser. And I'm not trying to like hate. Usually they're trying to hate on me, but like the irony's funny, I think, you know. They're like, bro, you're stupid, bro. You're a looser. It's like, oh, okay. All right. Whatever that means. Maybe he's telling me my like chokes in jiu-jitsu are too loose. I don't know, man. You know, which is a shot. That's a dig at me, man. Do you have a Discord group? Yeah, we got one. If you want to check out our Discord, it's completely free. Doesn't cost a penny. If you want to check out our Discord, I'll put the link up right here. All right, guys. Okay, good. No lag. Yeah, I don't know what it was. My computer lagged, but the stream seemed to hold solid, which is good, I guess. Again, if you want to join our Discord, doesn't cost anything. Not an investment professional, but if you want to check it out, here's the link. Appreciate the love. There's a Discord link right there. My baggy jeans. Honestly, I used to wear baggy jeans. I grew up in the 90s. And so my jeans were baggy in the 90s. I used to have some Jinkos with an alien on them. And I was the coolest kid on Fridays. I really wasn't. I was still kind of weird. But, you know. Not anymore, though. My jeans aren't baggy. My shorts are a little shorter now, though. I guess it's the style. Young people now are in the generation where they wear shorts like the 80s. Unless they're jeans. So, like, shorts are short, but jeans are baggy. You know, it's kind of this weird mix of 80s and 90s culture. Yeah, again, we're pretty much neutral in a range right now. We got 15 minutes. Powell speaking is going to be the most important part of this. So, yeah, we'll see. I'm ready. We'll see what happens. I only wear Speedos. Hey, man, I could see that. Do you think Powell is the most hated guy? I think Powell's got a hard rap, bro. Like, Powell, market can be thriving. Economy can be thriving. Nobody's going to give Powell the credit. Economy tanks, everybody hates Powell, you know. It's a tough job. And to top it off, he only makes about $200K a year as the Federal Reserve chairman. That seems a little low to me. Like, I don't know if I would take that job if it didn't come with added perks, of course. But, you know, yeah. 200K doesn't seem like much for all the heat that he's got to deal with. But I guess it's probably, I don't know. There's some perks that we don't know about, I'm sure. Yeah, I know. MC Hammer? Yeah. My daughter has some LSU sweatpants that were mine, super super baggy. She wore them constantly for like a year. Now they're ruined. But I used to have some really really baggy LSU sweatpants. I kind of miss them. You know, when you have kids, they end up just stealing all your stuff, losing it half the time. I probably had like 6 pairs of AirPods that my daughter's lost in the last 3 years. I love her, but you know. Yeah, we're going to stream the earnings too. Microsoft earnings, Meta earnings, IBM earnings, Tesla earnings all today. Yeah, well, he was an investment banker, Shy. So, like, it's, you know, his net worth is mostly built upon his investment banking career versus the chairman. All right, guys. Hey, we got 14 minutes. 14 minutes before the press conference starts. We'll see what happens. The earnings are after 4 p.m. is when the earnings release. The press conferences, I believe Tesla and Microsoft press conferences are at 5:30. Tesla is at 5. Or no, I'm sorry. Microsoft and Tesla's earnings call is at 5:30. Meta's at 5. And then all of the earnings are released at 4 p.m. Eastern Standard Time. Or technically, I think it's 4:05 p.m. Eastern Standard Time is what it is. All right, chat. How long we got? We got 13 minutes. Yeah, I'm not trading right now. I'm basically just waiting. The Discord link here. The Discord link's right here, guys. This is the last time I'm posting it too. I'm at a period of time where I'm not super optimistic about the market. I'm waiting for dips and value. I think the market's going to correct sometime. And so I'm just waiting. If we still start to rip up, I might start to kind of like DCA into some stuff. But I'm much less bullish this year than I am next. Or than I was last year, I mean. All right, chat. Oh, man. All right. Yeah, it gave that alert just because we got so many people joining real quick. Like, we got a whole gang of people join our Discord, so it just gave us that alert. We're fine. Most likely. DeepSeek? Yeah, do you guys like DeepSeek, or do you think it's good or bad for markets? What do you guys think? We got 10 minutes left until Powell speaks. Trading. Yeah, what's at the top of my YouTube is funny. Like, let me see. Like, they have different settings on YouTube. Mine are mixes, submission arts, martial arts, podcasts, stocks, news, poker tournaments, southern hip hop, beats, and comedy is what mine has. But I've got different channels that honestly have different stuff. Like, I've got another YouTube channel that I dedicate purely for business. So it's going to have a lot more like business stuff. This one I kind of like listen to music on, you know. Yeah, I mean, I think the DeepSeek news is going to mean AI grows at a faster rate relative to where it was prior to the news coming out, you know. And so I think the DeepSeek news is mostly good, but NVIDIA could be at risk if AI becomes less chip intensive. There could be some risk there. Southern hip hop. I listen to Lil Wayne. This is probably where that comes from. Yeah, Supermicro semiconductors. Yeah, I mean, it's going to be bad for a lot of people associated with the chip industry. Hey, nice, Wilfredo. The 7 holding you, the whole economy. Yeah, I don't think this. Again, people have a fundamental misunderstanding. Like, the stock market can influence the economy and vice versa. The economy can influence the stock market, more so probably. But they're different things. The stock market can crash and the economy can thrive. Or the economy can be in turmoil, i.e. like 2020 and beyond, and the market can be running. Because like after 2020 and all the craziness of that was going down, the microchip and AI boom was happening and the market was freaking running. And so they can be completely different things. Completely different things. It's not the same thing, and that's where people tend to have a... here, somebody ban this guy quick. Here, have a 24-hour ban, sir. But yeah, and so the market can do completely different things. 8 minutes, chat, 8 minutes. I don't care about DeepSeek because it's just a little bit better than GPT-4. I care about reasoning models as OpenAI. They are actually much better than other AIs. Yeah, for sure. And I also like the aspect of like assistants are probably getting hurt the most from all this stuff. Here, here, I'm gonna switch my headphones out so we have like good headphones for the speech. So bear with me, chat. We got these. Can y'all hear? Yeah, y'all should be able to hear. Let me know if the music's good. We switched headphones. These are fully charged. How can you see Powell's home, Corey? Yeah, I mean, nobody expected them to really cut rates unless, like, again, where people get misled for Fed decisions is generally, like, I said this 1,000 times, but people listen to Powell 3 months ago, and Powell might say whatever he said 3 months ago. Oh, we're going to cut rates aggressively, 2 percentage points by 2025 or whatever. And then they use something he said out of context and think that he's going to commit to that. And, you know, even though things have drastically changed from then to now, right? Like economic data has shown different things versus what their expectations were at that time. Inflation might be better or worse. The economy might be stronger or weaker than it was back then. And so it's just a different thing. Like you got to take the most recent meeting into context when you're looking at the Federal Reserve decisions. And that's why I told you guys we'd pause today, and we paused today is because number one, the CMB watch tool was incredibly accurate if you look at it same day. If you look at it during the FOMC day, it's going to almost always be on point and accurate with its predictions. Even like leading up to it, like, and it depends on how accurate. If it's 99.5 to 1, the likelihood that we're going to do anything outside of that is super low, man. Super low. And so again, like I always tell people, like, understand economics. You might want certain things or not want certain things, and Powell might have said something 6 months ago. It doesn't mean we're going to do something that's 99.5 to 0.5%, you know. All right, guys. All All right, I'm going to play an old video of mine, and I want to see if you guys tell me if you guys can hear it. Can y'all hear this? If you guys can hear it. Microsoft and Tesla's earnings call. Could y'all hear that? Like Microsoft and Tesla's earnings call with good sound? I'm just trying to check to make sure we're good. All right, cool. All right, chat. What's up, Mitch? How you doing, brother? Very quiet. Is it really that low? I can raise the volume here. Look, and in fact, I'm gonna raise the volume. It might make the music a little loud, but leading into this, is probably what you guys want, right? And again, if it's not loud enough, I can always raise the volume if you guys really want me to. So yeah. So I can always raise the volume if you guys want. Just let me know. Also, I am going to influence this. I am going to influence... sorry, hold on. Let me find... I am going to... I might change it to give you guys the most real-time release here, to be completely honest. I might change this to give you guys the most real-time release. So, yeah. Let me make sure. All right, you guys ready? Whew. All right. Yeah, so we're going to put this up on screen here, chat. Bear with me, pun intended, I guess. We got a minute and a half left. Chat. Let's get this all ready. And we're gonna give you guys another one just in case. All right. Okay, we'll put the this up here, and then we'll maybe put like hold on. All right, guys, we got less than a minute. We're ready here. We're waiting. Let me get this out. Make sure you guys can see it well. Maybe pull this up. Put one chart up here. Here's gold on the top. This is gold. I'm gonna mute this, and then when they start, there we go. And then put another chart maybe on the bottom here. All right, we got about 20 seconds left, chat. 20 seconds left. We'll put like the SPY on the bottom. All right, you guys ready? Waiting for Powell. Let me know if it's not loud enough when it starts. There he is.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong, is strong overall, and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer-run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve.
Mr. Chairman, Steve Leisman from CNBC. Mr. Chairman, at a event in Davos, or to Davos anyway, the president said he'll demand that interest rates drop immediately. So I guess I have a 3-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if any, does a president making these kind of remarks have on policy? Thank you.
3 questions. I'm seeing it really as 1 question, though. So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicated his demand to you?
I've had no contact.
Thank you.
Thanks.
Nick.
Nick Timmeros, The Wall Street Journal. Chair Powell, you and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely to maximum employment. So we really look at movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive, and for that reason, we're going to be focusing on seeing real progress on inflation, or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals. We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal, and that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance, and I'd say you look at the last couple of inflation readings and you see we don't overreact to 2 good readings or 2 bad readings, but nonetheless the last couple of readings have suggested more positive readings. So I think policy is well positioned.
Colby from the New York Times.
Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No. So let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier in the year as it related to the labor market. And we just chose to shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good, and there was another inflation reading, I guess, just before the December meeting. So we've got two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret too good or too bad readings, but this was not meant to send a signal. Other than this, you can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
And just to follow up, we've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been this encouraging data that you mentioned in terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the longer end, where it really matters. And those could be related to what you mentioned, some of the new policies. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, actually are not really beginning to see much, and I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do, this is no different than any other set of policy changes at the beginning of an administration. We'll patiently watch and understand, and kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum on just a set of expectations, and they're highly uncertain in both directions. We know that economic forecasting is really difficult beyond just a month or two out. So in the current situation, there's probably some elevated uncertainty because of significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder, and meaning, plausible could be, but honestly, you wouldn't stand behind it because you just don't know, and so you're just on hold, waiting to see what comes down. It's a very large economy, and policy is affected at the margin, but we're going to wait and see.
If I can follow up, the idea that you feel that policy is restrictive suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut, or data that will tell you you should hold?
We're looking, it's more the other, the way it works is we are looking at the data to guide us in what we should do. And, that's what we do. And right now, we feel like we're in a very good place. Policy's well positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation. And as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy, and so we feel like we don't need to be in a hurry to make any adjustments.
Howard.
Howard Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
So let me say yes in answer to your first question, but to the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available, and as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Well, if I could just follow up quickly on that, I'm wondering how you're getting that to be consistent with the Dodd-Frank law's stipulations about maintaining an Office of Minority and Women's Inclusion.
So I did mention consistent with applicable law, right?
Which is governing.
Elizabeth.
Thanks so much. Elizabeth Schulze with ABC News. Just to follow up on Steve's question, what reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
You know, as I've said countless times over the years, this is who we are. This is what we do. We study the data. We analyze how it will affect the outlook and the balance of risks, and we use our tools to try to, given our best understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else. And that's, you know, lots of research shows that's the best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said a few minutes ago.
You've said that the Fed is in wait-and-see mode based on the policies that come out of this administration. Has the Fed started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
So one of the things our staff does is they look at a range of possible outcomes, and they tend to go from really good to really bad, and you know, it's one of the best things that they do. And in each teal book, you can look at the 5-year-old teal books and see there are alternative simulations. So that's what they do. There'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark, you know, the policymakers to sort of think and understand about the uncertainties that surround this. So yes, the staff does that, and we're all well aware that the range of possibilities is always broad, and not just now, but always. And it's hard to be open to just how broad the possibilities are for an economy. You know, no one saw the pandemic coming, and it changed everything. So things happen, but yes, we do that. But it's different. It's one thing to do that, to make assessments about what might happen and begin to think about what you might do in that case, but you don't act until you see much more than we see now.
Katerina.
Katerina Saraiva, Bloomberg News. You know, last month you talked about a future rate cut as being pretty, significantly predicated on more progress in inflation. With the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd say it's the same. You know, we want to see, further progress on inflation. And, the story's there. We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation, because that takes out the seasonality issues that may exist. And, we're just going to need to see that. we think we see the pathway for that to happen. One example, a key example, is that you now do see owner's equivalent rent and housing services, the way it's calculated for PCE. You see that coming down pretty steadily now, and that's the place where most of the remaining gap is. In addition, a big part of the overrun, as you will know, was from non-market services, which don't tend to send much signal. So you can look through all that and think, okay, that then we seem to be set up for further progress. But being seemed to set up for it is one thing, having it is another. So we're going to want to see further progress on inflation. Remember, we're not, we're under 2%, but our goal is 2%, and we do mean to get back sustainably to 2%.
And in terms of the labor market, I mean, how is that broadly, you said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
So you're right. I mean, we look at, of course, a very broad range. So it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting, that kind of thing, the ratio of vacancies to unemployed. We look at all those things, and you put your finger, though, on it's a low hiring environment. So if you have a job, it's all good. But if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of a. Let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. The labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for a full half a year.
Edward.
Thank you. Thank you, Mr. Chairman. Edward Lawrence with Fox Business. On employment, you said there's a broad range of possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise." Now that the flow of the border has slowed and we're seeing deportations, how do you expect the unemployment rate to react?
So what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. But job creation has come down a bit too. So, if those 2 things come down together, that sort of can be a reason for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the break-even rate that you need in new jobs to make make jobs for workers declines as well. So that seems to be something about what's happening. You do see a very flat unemployment rate at a time when you've seen significant declines.
I want to ask you about Fed employment. I know that tax money is not used here, but Elon Musk alleges that the Fed is, quote, absurdly overstaffed. We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
We run a very careful budget process. We're fully aware that we owe that to the public, and we believe we do that. I've got no further comment than that. Thanks.
Chris.
Chris Rugaber at Associated Press. President Trump has said he will lower inflation by reducing gas and energy costs. Do you see such costs as a particular driver of inflation, and would lowering them have a dramatic effect?
Chris, I'm not going to react or discuss anything that any elected politician might say, so I'll give you a mulligan.
Okay, thank you. Well, nearly 2 weeks ago, the Fed said it was withdrawing from the network for greening the financial system, even as we have significant wildfires in Los Angeles doing billions of dollars in damage. And of course, the NGFS, as you know, is a group to talk about how the financial system could address climate change. Many commentators did see the timing as political. Why did you leave that organization? Can you explain that decision?
Sure, I'd be glad to. So we considered this, really at length, and we did decide to withdraw from the NGFS. And really the reason is that the work that the NGFS does has broadened very significantly. Think about nature-related risks and biodiversity and things like that. In addition, the work of the NGFS is in significant part intended to, and this is a quote, mobilize mainstream finance to support the transition toward a sustainable economy. So we joined to get the benefit of understanding what other central banks were doing and seeing research and things like that. I think this is just way beyond any plausible mandate that you could attribute to the Fed. And so we have a quite narrow role, as I've said many times, and I think that the activities of the NGFS are not a good fit for the Fed, given our current mandate and authority. So, and I just think it was time to acknowledge that, this process dates back, thinking about it dates back a couple of years. I made the decision to bring this to the board, some months ago. The process just took time to get here, and this is when we got it and voted on it. So, and I'm aware of how it can look, but it was really not driven by politics. It was driven by kind of the disconnect between the work of the NGFS and our mandate. Other central banks have different mandates and belong to the NGFS. We have no criticism of them, but it just isn't. It's not right for the Fed.
Andrew.
Thanks. Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for consumers.
Well, 2% inflation down to 2% sustainably is what we're trying to achieve. We're somewhat above that, as you know, and we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see, and consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to ask was just how far away you think you are from neutral.
Yeah, you can't know with any precision, of course, as I like to say, that you know the neutral rate by its works. So I think at 4.3%, we're above pretty much everyone on the committee's estimates of the longer run neutral. I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has helped bring the labor market into balance as well. So that's what we think. I would say we're meaningfully above it. I have no illusion that anyone knows precisely how much that is. But not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
Victoria.
Victoria Guido with Politico. So as a general matter, when it comes to executive orders and OMB memos, do those always apply to the Fed, sometimes never, or do you just often voluntarily comply? What is the legality there?
So it's been our practice, as I mentioned, to work to align our policies to those that are mentioned in the executive orders, and I'm just going to leave it at that. As I mentioned, I'm not going to go any deeper than that or get into any deeper into this set of issues today.
Claire.
Claire Jones from the Financial Times. Two questions, if I may, on tariffs. Well, first of all, we've seen global trade wars before, notably in 2019, last time around, but then we were in a very different place on both inflation and growth. If we see tariffs of the same sort of magnitude that we got then, which I know is big if, what do you think might be different this time around? And secondly, Tiff Macklem said there was no doubt that the threat of tariffs was a big driver of the cut by the Bank of Canada today. What sort of information would the Fed need to see on tariffs before it was willing to take such a preemptive move? Thank you.
Sorry.
What sort of information would you need to see on tariffs? Would you need to see a strategy, actual implementation, actual movement of inflation expectations before you're actually willing to change the path of monetary policy on the basis of it?
Yeah, so first of all, things are a little different now. We've just come through a high inflation period, and you can argue that both ways. You can say that companies have figured out that they do like to raise prices, but we also hear a lot from companies these days that consumers have really had it with price increases, and so I don't know how that shakes out. Nonetheless, you're coming through a situation where we're not quite back to 2%, and that's just different. In addition, the kind of footprint of trade has changed a lot as trade is now spread around. It's not as concentrated in China as it was. There's a lot more manufacturing. It moved to Mexico and other places. So there are differences, and I just think the range of possibilities is very, very wide. We just don't know, and I don't want to start speculating, as tempting as it is, because we really don't know. And we didn't know, by the way, in 2000 and I guess 18. We didn't really know, and the range of possibilities very, very wide. We don't know what's going to be tariffed. We don't know for how long or how much, what countries. We don't know about retaliation. We don't know how it's going to transmit through the economy to consumers. That really does remain to be seen. There are lots of places where that price increase from the tariff can show up between the manufacturer and the consumer. Just so many variables. So we're just going to have to wait and see. And the best we can do is what we've done, which is study up on this and look at historical experience, read the literature, and think about the factors that might matter. And then we'll just have to see how it goes.
Courtney.
Thank you. Courtney Brown from Axios. Two unrelated questions. The first is whether or not there was any discussion about QT and the timeline for ending QT at this meeting. And then the second question is just, I wonder if the AI-prompted sell-off in the stock market this week signaled anything to you about the state of financial conditions?
So, let's talk about runoff. So the most recent data do suggest that reserves are still abundant. Reserves remain roughly as high as they were when runoff began, and the federal funds rate has been very steady within the target range. We track a bunch of metrics, and they do tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively in our ample reserves regime. We're closely monitoring a range of indicators to assess conditions, and that should provide signals whether reserves are approaching a level that could be judged as, quote, somewhat above ample. I don't have anything to say to you about particular dates. It's just that's the process, and what we see is that rates do appear to be abundant. As always, we stand ready to take appropriate action to support that smooth transition of monetary policy, including to adjust the details of our approach for reducing the size of the balance sheet in light of economic and financial developments. On AI, it's a big event in the stock market and in particular parts of the stock market. I mean, what really matters for us is macro developments, and that means substantial changes in financial conditions that are persistent for a period of time. So I wouldn't put that label on these events, although, of course, we're all watching it with interest.
Simon.
Simon Rabinovich with The Economist. Thank you. You mentioned in your remarks that activity in the housing sector seems to have stabilized. At the same time, since your first rate cut in September, long-term mortgage rates have gone up by a full percentage point, back above 7%. I'm wondering, kind of looking forward, are you confident that activity will remain stable given how elevated mortgage rates are? How does it fit into your broader thinking about the economy?
So, as you know, as we've reduced our policy rate 100 basis points, longer rates have gone up, not because of expectations, not principally because of expectations about our policy or about inflation. It's more a term premium story. So, and it's long rates that matter for housing. So, I don't think I think these higher rates are going to they're probably hold back housing activity to some extent if they're persistent. We'll have to see how long they persist. So we control an overnight rate. Generally, it propagates through the whole family of asset prices, including interest rates. But in this particular case, it's all happened at a time when, for reasons unrelated to our policy, longer rates have moved up.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you want to see further progress on inflation. Given that households appear to be unhappy with the elevated level of prices, do you believe the committee should wait until inflation has fallen back to target to cut rates again?
No, I wouldn't say that. We've never said we need to be all the way at target to reduce rates. At any time, what we're doing is we're looking at the economy and asking whether our policy stance is the right one to achieve maximum employment and price stability. So I think if we would want to see further progress, but we think our, as I mentioned, we think that our policy stance is restrictive, meaningfully restrictive, not highly restrictive, but meaningfully restrictive. And so I would think we need to see further progress. I wouldn't say all the way back down to 2% on a sustainable basis, although we'd love to see that, of course, and we will.
And a separate question for you on tariffs. Curious whether the threat of tariffs and not knowing whether they could stick or not creates uncertainty for business here in the United States and could cause them to pull back, ultimately weighing on growth. Does the threat of tariffs cause you to ponder your growth forecast?
I want to avoid commenting even indirectly on the conduct of tariffs. It's not our job, and it's not our job to comment on the moves that people make. So I wouldn't want to criticize anything that's happening or really comment on it one way or another, praise it for that matter. It's just not our job. I do think that, we found in 2018 there was a lot of work done on trade policy uncertainty. Trade policy uncertainty, if it's large and persistent, can start to matter for businesses making investment decisions and things like that. That's not something I'm observing today. It's very early days for this, but I think that did matter in 2018-19, and it's one of many things we'll be watching.
Matt Egan.
Thank you, Chair Powell. Matt Egan from CNN. Following up on Courtney's question from earlier about the stock market, how concerned are you, if at all, about potential asset bubble brewing in financial markets? How do relatively high market valuations factor into considerations about potentially lowering interest rates further? Is that something that's in the back of your mind?
So we look at, from a financial stability perspective, at asset prices generally, along with things like leverage in the household sector, leverage in the banking system, funding risk for banks and things like that. But it's just one of the four things asset prices are. And yeah, I'd say they're elevated by many metrics right now. A good part of that, of course, is this thing around tech and AI. But we look at that. But we look at how resilient the households and businesses and the financial sector are to those things. So we look at that mainly from a financial stability perspective, and we think that there's a lot of resilience out there. Banks have high capital, and households are actually overall, not all households, but in the aggregate, households are in pretty good shape financially these days. So that's how we think about that. We look at overall financial conditions, and you can't just take equity prices. You've got to look at rates too, and that represents a tightening in conditions with higher rates. So overall, financial conditions are probably still somewhat accommodative, but it's a mixed bag.
Richard.
Hi, Chair Powell. I'm Richard Escobedo with CBS News. One question for you. This month's statement notes that unemployment has stabilized at a low rate and that the labor market is solid. You walked through some of what's driving this, but I wonder what risks you see that might challenge your assessment.
Well, the things we discussed earlier, one is that there's a low hiring rate. And so that if there were to be a spike in layoffs, if companies were to start to reduce headcount, you would see unemployment go up pretty quickly because the hiring rate is quite low. So that's one thing we look at. I think it's worth pointing out that for lower income households, they're under significant pressure. And in the aggregate, the numbers are good, but we know that people at the lower end of the income spectrum are struggling with costs. And really, it's high inflation for the basics of life. It's not so much the inflation now, it's the price level, because inflation has raised prices. Inflation is now much closer to target, but people are really feeling that. But, overall, this is a good labor market. You're at 4.1% unemployment. That's just a really good level, and you've been solidly there now for 6-7 months. And job creation is pretty close to a level that will hold the unemployment rate there, given that there'll be much slower population growth.
One more question. Some of the uncertainty around immigration policy, in your assessment, is that making it harder for businesses and the Fed to plan going forward?
We hear anecdotal reports, but I don't see, there's nothing in the data yet on that, but you hear that kind of thing about construction, for example, and businesses that are dependent on immigrant labor are saying that it's suddenly gotten harder to get people. But I know you don't see that in the aggregate data yet, but yes, you hear it anecdotally.
Nick.
Thank you, Chair Powell. Nicholas Jasinski from Barron's. The uncertainty is certainly a theme today, and I'm wondering, are there any periods from your career, or as it relates to markets, the economy, what's going on here in Washington and beyond, or from lessons from history that may provide some guidance for a central banker operating in uncertain times like today?
I guess I'd say this. Uncertainty is with us all the time. It is human nature, apparently, to underestimate how fat the tails are in a way. The possibility, we think of things in a normal distribution, and in the economy, it's not a normal distribution. The tails are very fat, meaning things can happen way out of your expectations. It's never not that way. I wouldn't, if you think about it, think about the first few months of the pandemic. That was uncertainty. Are we going to be able to reopen the economy? If so, when? How much of it? How long will it take? That was uncertainty. What we have now is a good labor market. We have the economy growing at 2 to 2.5%. Inflation's come down to now the headline inflation number was 2.6, and that's what the public experiences. We look at core because it's a better indicator of future inflation. So yes, the price level went up a lot for inflation, and people are feeling that, and they're not wrong. But so the kind of uncertainty we have is just a usual level of uncertainty about the economy, but then policies which are not for us to criticize or praise, really. Those are policies which people have been elected to implement. They're implementing them with a view to making a better economy. And so I wouldn't call this out as one of those times. I wouldn't compare it to the global financial crisis or anything like that, given that we have actually a very good economy right now.
Evan Reiser with Market News International. Chair Powell, is a March cut still on the table? And then additionally, are you looking to see better than expected data on inflation to cut, or are you looking for inflation data that roughly aligns with current forecasts?
So as I mentioned, the economy's strong, the labor market's solid, downside risks to the labor market appear to have abated, and we think disinflation continues on a slow and sometimes bumpy path. That tells me, and the other members of the committee, the broad sense of the committee actually is that we don't need to be in a hurry to adjust our policy stance. Your second question was?
Whether or not you need to see better than expected inflation data, or just inflation data that roughly aligns with your current forecasts?
It's one of those things, we'll know it when we see it, but more the expectation is that we will make continued progress. And, that's what we want. We'll know it when we see it. It's going to have to be something that isn't just idiosyncratic. You're going to want to see continued progress with housing services inflation. You're going to want to see inflation behaving in a way that builds confidence that we are really making progress. That's what it's going to be. And I mean, is that better than our expectations? We expect to see that. It's just a question of when.
Scott.
Hi, Chair Powell. Scott Horsley from NPR. In your 5-year review, you said the 2% inflation target won't be on the table. Can you talk a little bit about why? Is that because you think that's the right target, or is it because you don't want to move the goalpost mid-game, or what's behind that?
I think that goal has served us well over a long period of time. It's also the sort of global standard. I think that if a central bank wanted to look at changing that, you wouldn't do it at a time when you're not meeting it anyway. I would not look at changing it anyway, but I certainly wouldn't look at it at a time when you're not meeting it. I mean, there's just no interest at all in changing it, if I'm being at all unclear. We're not going to change the inflation goal anytime soon.
And 5 years ago, if I can paraphrase what y'all decided, it was you're going to not raise interest rates preemptively to head off inflation until you see sort of the whites of the eyes of inflation, because the solid labor market was so beneficial. Have the last few years changed your thinking about that?
So what we really said was that we wouldn't look at a strong labor market and raise rates unless we saw some evidence of inflation. So the thought was that we'd seen really low levels of of unemployment with no sign of inflation. So why would you preemptively want to put people out of work in the absence of any kind of any evidence that suggested that this was not a sustainable level? It was a way of acknowledging how much humility we have about the starred variables, especially U-star, the natural rate of unemployment. So that was an insight. We'll discuss that again. That'll be one of the many things that we discuss. But I don't think that insight is wrong. We didn't, we said, what we said was that, at times when inflation persistently undershot 2%, we would likely allow inflation to run moderately above 2% for some time. That's what we said. That turned out not to be relevant to what actually happened. There was nothing moderate about the overshoot. It was an exogenous event. It was the pandemic, and it happened. And our framework permitted us to act quite vigorously, and we did once we decided that that's what we should do. The framework had really nothing to do with the decision to. We looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view and we raised rates a lot. And here we are at 4.1% unemployment and inflation way down. But the framework was more irrelevant than anything else. That part of it was irrelevant. The rest of the framework worked just fine as we used it, as it supported what we did to bring inflation down.
Let's go to Mark for the last question.
Hello, Chairman Powell. Mark Hamrick with Bankrate. As you know, in the annual report from the Financial Stability Oversight Council, among the risks outlined is cryptocurrency. Could you talk about those risks now? And regarding individuals and households, perhaps distinct from the concern about the financial system, do you worry that speculation in this unregulated asset class could hurt their financial well-being, or do you think it has a place in a household's portfolio?
So our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and we think it's, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and soundness. A good number of our banks that we regulate and supervise do that. The threshold has been a little higher for banks engaging in crypto activities, and that's because they're so new, and we don't want to make the mistake. If you're making a choice to conduct that activity inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, we're not against innovation, and we certainly don't want to take actions that would cause banks to terminate customers who are perfectly legal just because of excess risk aversion, maybe related to regulation and supervision. So.
And with respect to households and their inclusion in that asset class?
That's kind of it's not really our bailiwick. You want people to be knowledgeable about the financial engagements that they have, and that's why we have, the securities laws that we have. It's why, if you read a mutual fund prospectus or a individual stock prospectus, you want households to have the chance to understand the risk that they're taking. And, I do think it would be helpful if there were a greater regulatory apparatus around crypto, and I think that's something Congress was working on quite a lot. We've actually spent a lot of time, with members of Congress working together with them on various things, and I think that would be a very constructive thing for Congress to do. Thank you.
All right, guys, so that is Big Papa Jerome Powell's press conference. Let me know what you guys thought. So Bitcoin actually popped up on that last question here. If we look at like the SPY right here, again, he was pretty neutral. I see some people just angry in chat. And listen, guys, if you expect the market to, like I said this in the last meeting, if you expect the market to crash every single FOMC meeting, I'm going to assume that you're just kind of new, because the market doesn't crash every FOMC meeting. In fact, like Powell, believe it or not, does not want to crash under his watch. He's not going to say super bearish things unless we have the economic data to justify it. Because, like, okay, since the last meeting, right? Since the last these happen every 6-week periods, right? Every 6 weeks we get one of these meetings and rate decisions. Since then, we've had economic data come out. Inflation was lower than expected. I think PCE inflation drops Friday, and so we'll get another look at inflation. And again, my guess is, like, to be completely honest, and again, I think we're going to correct sometime this year. But, my guess is that people take really bearish sentiments and positions, and they start to say the market's going to crash, the market's going to crash. And so then when you hear Jerome Powell talk about, like, inflation or more so like the economy being in a good spot, what he's referencing is GDP data is well over 2%. Unemployment's under 4.5%. They've gotten better, not worse, in the last 6 months. And the labor market is relatively strong in terms of payrolls. Like, payrolls were honestly a little bit too strong, right? But what you get is, like, you get all these people complaining. And again, I'm not necessarily disagreeing with you guys, but they don't really understand economics. And so they're, like, just kind of, like, regurgitating political talking points. I see some people in chat talking about how, Powell needs to cut rates so things can get more affordable. And again, I'm here to tell you, by lowering interest rates, people are going to have less interest. They're going to take more loans out, and they're going to consequently spend more, which is going to make prices go up, not down, right? Lowering interest rates does not make things cheaper for the rest of the world. In fact, lowering interest rates is going to make things more expensive for the country, not less expensive. And again, these people don't really understand economics, so they're just kind of spitting out stuff that they think sounds smart. But, like, in the end, the reality of it is the issue that we're facing in this country right now is not economic weakness, right? We saw some economic weakness following 2020 and all that stuff that happened back then. I don't feel like talking about. We definitely saw some economic weakness. But right now, because of all the economic stimulus that we did following that to try to save us from that economic weakness, the big elephant in the room is inflation. That's what everybody's watching. That's the reason the Fed's not cutting rates right now, is because they don't want to increase inflation. They don't want to make inflation worse. And inflation is the risk because prices have gone up so much in 5 years that people are genuinely unhappy. But that doesn't mean the economy's weak. It's actually the opposite. The economy was too strong following the economic stimulus that we got in 2020 until prices tripled in a lot of areas. That's why people are unhappy. Right? And so when Powell says, hey, the economy's doing good, he's not necessarily wrong, but people get mad at him for it. They're like, oh, how dare you say that? You don't understand the average Joe. And it's like, no, not really. The economy's actually pretty decent, but the consequence of a, like, heating up economy is inflation. And that's why everybody's still unhappy to this day. And so you just got to understand what you're talking about, guys. The Federal Reserve, again, he was pretty neutral. Bitcoin rising as it seems like more finance people are accepting Bitcoin. But you just got to understand what all this means. It's not rocket science. Reducing rates can increase inflation, but ultimately stimulate the economy in a more profound way. Increasing rates can combat inflation, but ultimately cause a weaker economy in a more profound way. That's easy. That's pretty easy. Just learn those two things. You guys will get the hang of it. A lot of you guys understand it. I'm not talking to everybody here. I'm just saying, like, listen, guys. People can be unhappy, and we can have a thriving economy. They don't contradict each other necessarily. In fact, like they kind of go with each other to a certain extent. Look at Bitcoin rise here right now, guys. Look at Bitcoin pump. Yeah, we're going to cover Tesla earnings. We're going to cover all that stuff. Shout out to all the people that said my levels were good. There were a couple different people that said my levels are good. Thanks so much. Yeah, again, I self-draw these levels. These are self-drawn levels that I use on my charts. I base my trades around them, so I draw them, I leave them up. I don't usually delete levels unless we get like some price action that contradicts them. But yeah, appreciate it, guys. Hey, listen, we're going to pivot, we're going to mosey on over to Tesla earnings. Tesla earnings, Meta earnings, Microsoft earnings, IBM earnings going live in about 25 minutes, guys. Don't go anywhere. We're going to pivot right to that stream. You shouldn't have to close the stream. It should immediately pivot you to the Meta Tesla earnings stream. If you want to check out my sponsor, check out Top Step, one of the most legit ways to learn how to day trade. Almost all day traders lose. Doesn't matter where you go, what course you take, who you follow. If somebody's promising you the world in some super expensive day trade course, run away. They're mostly full of crap. Most day traders lose. And so do not fund your own account day trading. Almost all day traders lose money. Instead, try a funded account program. If you lose, it's not the end of the world. Top Step's one of the most legit, if not the most legit in the world. They give you a demo. They test your skill with the demo. If you pass the test with the demo, they then fund you between $50K up to $150K with a 90% split. You get to keep your first $10K in profit once you're funded as well, which is, again, similar to funding your own account. But if you lose, you're out $50, right? If you pass it, you get a 90% split. They paid out almost $200 million. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. And Top Step X has zero commission. Look at these. Look at all my trades today, bro. Look at this. I'm going to toot my own horn a little bit. Look at these trades, bro. Shout out to all that green. Hey, listen, guys, we're going to go to our Tesla earnings stream. If you want to check out Top Step, again, they pay me money. I'm definitely one of the top 3 most biased people of all time ever in the world right now because they pay me money. Not an investment professional. I have no freaking idea what I'm talking about. If you copy me, you'll lose, probably. And I do trade off stream. You're not going to see all my trades. Understand CFTC 4.41, hypothetical or simulated performance have limitations. Guys, if you want to check them out, though, here's the link. Yeah. Don't copy me. I have no idea what I'm talking about. Anyways, guys, we're going to go to our Tesla earnings stream, which is going to be starting, yeah, right now. If it doesn't, for whatever reason, redirect you to the Tesla earnings stream, go to this link. Here you go. There's the link right there. Check it out. I'll see you guys over there. Again, it should redirect you. As soon as we close this stream, it should immediately bring you to the Tesla earnings stream. So, yeah, I'll see you guys over there. Let me make sure real quick. Hold up. But yeah, we're going to go over there. There's the link in chat right there, the YouTube link down there at the bottom. Okay, yeah, redirect is good. Let me refresh this. All right, yeah, we're good. All right, let's do this. I'll see you guys over there.